It's been really rough over the past couple of weeks. If you are curious and wondering what is going to happen in the stock market with your favorite stocks tomorrow, then this is the video for you. We had a little bit of a run up today, but then it pulled back and we're now bouncing off of the gap that was created over the weekend into the early Monday morning AM pre-market trading hours. So if you're wondering what's going on in the stock market and what you should be doing, we're going to be taking a look at different stocks like NVDA. We're going to look at Tesla, SPY, SOFI, and we're also going to take a look at Microsoft as well. We're going to look at technical, fundamental data. I'm also going to show you guys some key items that are very important to keep track of to understand what's going on in the market. And whether you're new in the market, just getting started, maybe you don't know where to begin. This is something I teach my students. I would love to help you guys understand a volatile market, how to make money, hedge your portfolio, mitigate risk, and understand the technical and fundamentals, as well as implementing it into your portfolio for strategic gains. If you want to learn how to trade in this environment or any environment, I am offering my masterclass, my free masterclass webinar this Friday, April 11th, 6 p.m. Eastern, 3 p.m. Pacific. Link is in the information box below. Limited spots remain. I will see you there. I want to show you guys one of the very key things to understand when you're looking at the stock market. We're going to look at SPY, and we are in a complete downtrend and a falling knife, so to speak, since April 2nd, right before tariffs. We have a very big event that has happened here, which I'm going to show you, and this is called a change of character. When the stock comes up and closes above the previous high. You see, this is a previous high right there. Right here is a previous high, lower highs. Then we gap down. We filled this gap and we closed right here. We actually closed right there, which is below the previous high. Lower highs, lower lows. But right here, it's in line. When we came up here and closed, this character was changed, and so is this. It was a complete change of character, and we closed right in line here. If we would have broke and went into the 200 moving day average and closed up here, we would have changed this character and broke the structure. We have not done that yet, but we are right now at key support on the gap. As long as tomorrow and into Thursday, we stay above this gap and work our way slightly either this way or this way, and we stay above this gap, this looks like it could be the floor. Not yet. We need to see the rest of this week and into next week if the stock stays or the ETF stays above this gap. The more support we get at this gap, the more confidence that we will have, and the market, investors, everybody, the world will have at this price. It makes it a stronger price. And right now, it's literally resisting exactly this line. If I zoom in, you will see this is in fact where the resistance is. So let me show you, get rid of all these drawings here, clean this up. You will see these are two very key spots to watch. This, which will make a purple color so we can differentiate it. This is the line. I'll even make it a little bit smaller, make it 3 point, and then what we'll do is instead of solid, we'll make a dashed line or a dotted line. That dotted line we need to stay above in order for this change of character to hold. As long as this change of character holds, we have a chance to break this structure. What I'm looking for in SPY for a confident turnaround is to close above this line. Another green candle will start to form, hopefully, and it'll start to move up. Once we break above 525 and we can close above 525, we've now broken this structure completely. And that's what I'm looking for today and tomorrow as we go to this week. And if Jerome Powell has any good news, this will help solidify this position. We look at Tesla. I've explained before that Tesla is very strong. And tomorrow, I think SPY will open up strong and move upwards possibly. But it's really hard to tell based on fear and how the sentiment of the market is. There's a lack of trust in the market right now because of how much it's moved down. And when we look at Tesla, we can see it's fallen below the gap and now it's working its way up, which is not the greatest of signs because it's bouncing off the bottom of the gap. So this isn't great. It would need to be above the gap. And since it's not, Tesla is showing signs of weakness and it could push further low and drop into the 220 or 210 or maybe even lower. Tesla is showing and faltering right now as we speak. It's showing some weakness and that is not good. We need to get above the top of this gap. When we look at Meta, again, it's a very similar story, one that we've seen many times so far. But what we have noticed with Meta is it came up and it bounced off of the 200 moving day average. However, right now it's resisting way above the lower lows and lower highs. So not only do we have one change of character, we also were trying to have a second change of character, but because we closed up here, we broke this downtrend structure. We broke the structure, a BOS, a break of structure. We're way above this gap. So as long as we can hold above 516 to 520, right in the range we're at now, and work our way and consolidate or move up, one or the other, whether we go up this way, up then down, as long as Meta will stay above this line right here, we are in really good shape as far as support and strength. We're showing signs of a turnaround. As soon as we have a candle that closes up here and we have some direction going like that above 540, we know that we have potential for a full recovery and we're moving forward. Right now, we're in the early stages of this, and we can see that it's slightly overbought and it's pulled back and now it's neutral. And this is good because if you look at the RSI, we're neutral. We're in the middle. We're not overbought and we're not oversold, but yet Meta is consolidating above this structure. Change of character. And we can see that even though it's not overbought or oversold, we're consolidating and holding strong above this lower price. But key metric to point out is it's happening with the stock not being overbought or oversold, meaning we're neutral and we're holding. Very, very key recipe for strength. If this was overbought still, completely overbought, like 75 or 80 on the RSI, then it's taking a lot of buying pressure to hold it here. But considering we're actually below 50, we're about 40%, there's a little bit of a bias towards selling, yet it's still holding. This is very strong on Meta right now, so that's very good. When we look at Microsoft, we can see a very similar situation to Meta. It is holding above the gap. So we put this line right here. We have resisted the gap, which is good. We had a change of character. We came up. We almost had a change of character again, but we couldn't close above. So we came back down. We're holding above the gap, which is a change of character. As long as we hold this position and move our way forward, we've resisted the 200 moving day average. If this doesn't happen, a downward move could likely take place. If this does, so I think it's either going to come down in the 340, 335, and then bounce back into 370, or it'll just kind of consolidate. And right now we are waiting for this to play out to see what happens next on Microsoft. But this is a strong stock. A lot of these stocks are not going to be as dependent on the outcome of tariffs such other stocks would be, like, for example, Apple, Walmart being another, Amazon being another. This would not be a stock that would be beaten up as badly or anywhere near as bad because it's more software and services. When we look at Google, again, we're looking for a very similar trend on Google, and we can see the gap is down here. So as long as this stock stays above 145, we're in good shape. The change of character happened right here, and another change of character happened right here. We're way above two changes of character, which is actually a break of structure, but we did not close above, but we are staying above this change of character. So we can consolidate. It gives us more strength for a potential reversal. As you can see, this dip, this gap, come up, break structure, change character, come down. As long as we find support here like the other stocks, everything is showing potential for a turnaround. If this week the stocks close or move in a direction north of this area on every stock that I showed you, every single line of the stock stays above and works their way up above those lines I've shown you. For this, specifically on Google, to show us signs of a reversal that's stronger, we need to see Google break through and show higher highs and higher lows. So if Google comes up to 154 up here, comes back down and consolidates on 148, which I'll show you what that would look like, just give you an idea. If it was to come up tomorrow like this, resist, and then come back down like this, and then consolidate, that right there would be a higher low and a higher high. You see? This would be an uptrend. Obviously, it wouldn't want to break that line. It would have to resist here and go up. We'd want to stay above that line. So to make it picture perfect for you guys, it would look something like this. This is just one idea. As you can see, that's an uptrend. We're looking for something like that. We need a very key ingredient here, which is a higher high and a higher low. That shows the complete circle that we are now in a potential and most likely in an uptrend and a reversal. Right now, the reversal is looking very probable and it's happening right now, but it's not 100%. But if we're asking where the bottom is, well, it looks like, and it's becoming more clear, this is likely to be the bottom. Not 100%, but we are trying to figure this out ourselves by using data and confluences. Yet again, we can see Google is holding the line very strong. And not only is it doing that, we're at 40, maybe 35 on the RSI. So we are a little bit on the bias of being sold more than bought, but we're still holding this spot. Very very strong. If we look at the VIX is the volatility index. We really got to take a look at that. We can see in the morning, the VIX tanked down and it changed character right here. And almost here, it tried to break structure. It did not. It came back up and now volatility is increasing, although volatility is resisting right here. It's very important to understand the reverse order of things. The VIX needs to stay below 50 and it needs to show a lot of resistance and it needs to fall off of 50 like it's doing right now. If this resists tonight and tomorrow and the VIX continues to drop, which it filled this gap here, which is not good, but if it continues to drop and comes back down, then you can clearly see that we have a downtrend in the VIX. The VIX needs to resist exactly like I'm showing you right now. This is what needs to happen in the VIX. It's very important for this to happen. And as you can see, it looks like it might be likely to happen today and tomorrow. But understand tomorrow Jerome Powell is speaking at the FOMC. It's very important. Then, of course, we have inflation data year over year, month over month. We have all this data coming out Thursday. And then, of course, Friday, we have PPI month over month. And we also have the Michigan consumer sentiment. But this is not as important as tomorrow, which is why the markets are having a little bit of increased volatility right now. Another strong indicator to look, and I want to show you guys of severe importance when you're trying to gauge the market in the after hours as well as during the day, is the futures. Looking at the MES, which is the micro S&P 500 index, the micro minis, it shows you that we are indeed having a change of character. It's already happened. And another change of character up here has tried to happen. It didn't. So we had one here, two here, and the third didn't happen. We did break structure on the second one, and now we're holding above the gap. And we're almost oversold. Very, very biased towards selling, yet we're holding strong above the gap. And this is really a normal thing when a market is stable and waiting on news and they're not bearish or bullish. There's no fear or greed really per se. This is kind of neutral. Everybody's just stopping. So we are waiting to see what happens with Jerome Powell tomorrow. But you really want to gauge the futures as well when you're looking at stocks like this. I also want to show you the Chinese index, which is continuing to fall. Unlike our market that has rallied somewhat today, we're going to go to the 1 hour chart and you can see it's nothing but consolidation. Their market hasn't really done a lot. It's beaten up, especially over the last 6 or 7 years. Since 2018, it's been constantly in a downtrend. It has had some recoveries upwards, but then it would fall yet again, still illustrating an actual downtrend, which if I show you on the 4 hour or the daily chart. So you see what happens here. Our market was going down since January. Their market's going up, tariffs go into place, and then their market goes down, and ours went down as well and is now starting to rally, while their market is continuing to go down a little bit more, and they're also in a 7-year downtrend, okay? Which you can clearly see right here. This is not a strong market at all. This is the Chinese index. It's not strong. They rallied while we were sinking since January. And now when the tariffs go into play, it shoves them down just as much, if not more than us. And even if it was equal, our markets are slowly recovering right now, and we're trying to build strength. This kind of goes hand in hand with everything that we've talked about in previous videos, trying to strengthen our economy. One thing I want to show you is dark pool activity. You'll see in the dark pool on SPY that a lot of the bearish activity expires April 17th, right after tax season, right after Jerome Powell speaks, or right about when Jerome Powell speaks, which is the third week of April. I believe it's the 18th. And it's after all of these events that are taking place right now. And I believe a lot of the bearish sentiment expires right around this time. And it's confirmed here that most of the bearish sentiment is in April, if not all of it. And when you look at the very two bullish big trades in dark pool that consists of 92 million and 56 million, which is a lot of money. $148 million is bullish for May 16th and April 17th. So from April 17th to May 16th, all of the other bearish activity is April 17th or prior. There is one here for April 30th, but most bearish activity is happening during that time. When I switch the sentiment to bullish, we will see that a lot of the bullish sentiment is also tied into April 17th, but a lot of it's May 16th. We also have April 30th, May 16th, and down here we have some more April 17th. So it's kind of up in the air, but there is more bullish activity going to the end of April through May and June than there is bearish. And it seems like a lot of big money in the dark pools is betting on the sentiment of the SPY and other stocks turning bullish. And when we look at Meta, it's pretty much the same thing. May 16th, April 17th, May 16th, June, May, We have a lot of May and a lot of June bullish sentiment and big money, tens of millions of dollars. When we look at the bearish sentiment, we can see that a lot of this bearish sentiment takes place April. See the list? We have one expiration in May. Everything else is April 17th. And this is kind of the norm now, it seems, over the past couple of weeks, is that April 17th seems to be this bearish deadline, so to speak. So we could see Meta April 4th, April 17th, April 4th. We do have some October and a lot more coming down here that are April. We have one 2026. But we also have a 2026 that's bullish. So it's kind of 50-50. But all of the bearish activity mostly, again, is April. So April 25, we could see that there's a lot of bearish sentiment. When we switch to bullish, we can see June of 26. We see more April, more June of 25. We have a lot more April 25, more June of 26, or actually March of 26, more June of 26, more April 25, more May, more June of this year, some April and May and June of this year. So this is a trend that we're seeing here that pretty much mid to end of April going through May and June of this year, bullish. Most of the rest of the year, bullish, but everything this month, bearish. So it seems to be not orchestrated, but big money is betting in the same direction. Tax season ends April 15th. Jerome Powell speaks on the 18th or 19th. We have this tariff talk, all this bearish talk. The stock market is dropping. All this money is coming over, and then everything's bullish, set to prime and explode and run right on the exact same couple of days and weeks that all the tariff is coming. And it's all taking place around the tariffs. And now there are countries saying that they want to work with Trump on 0 for 0 tariffs, like the EU. Canada's premier, or Ontario's premier in Canada, Doug Ford, said the same thing. We've also had offers from Taiwan and other countries as well. And it's all starting to line up. If Trump starts to make all these deals and the market runs, then it looks like it was kind of intentional and primed for the $7 trillion on the sidelines to come in. All this money in money markets, which is what I've been saying for a very long time. And the dark pool data is starting to align with this sentiment, and it's lining up perfectly with tax season, all these events and the tariffs. It's all starting to come together, and it looks like this could be the case. With that being said, the Chinese economy is having a little bit of a hit right now, but it is recovering slightly and consolidating, just like our market, but we have had a lot more recovery, and I just find it a little weird that this correlation has happened where our market was going down a lot, their market was going up, but then the tariffs get implemented, and then we have a recovery, and they're just continuing to drop, and today, right now, finally starting to stabilize. So it's just a little weird mix of things that are going on. Then there is some fake news. Trump had said that it's fake news, at least yesterday, that tariffs would be possibly paused for 90 days. That came out, and White House and Trump said that was fake news. I feel like this was kind of testing the waters, so to speak, and intentional, because stuff like that doesn't really happen that way and in that order, so to speak. It's just very bizarre. And I don't in any way, shape, or form rule out the possibility that a lot of this was overreacted due to the fact that it was done intentionally. The overreaction was a little bit too big, in my opinion, and I believe this was a little bit of an overreaction, but the tariffs, if we end up getting a bigger, better deal, so to speak, if there is such a thing, if we end up getting a better deal with this tariff issue going on, then it begs the question, was this intentional? These tariffs were put into perspective to be worse than they were and more aggressive than they should have been, just so they could intentionally get the markets to crash somewhat so they could buy into the market more, because I've explained this to you guys in the past. Over the past year, I've explained to you that there is $7 trillion in the sidelines in SPACs accounts, money markets, bonds that has been needing to come into the market when rates get cut. If Jerome Powell cuts rates and we go below 4 and work our way to 3.75 or 3.5 and even worse, 3.25, it gets to a point where money is going to flow into the stock market because there won't be enough income, enough growth in SPACs accounts and bonds and stuff like that. That's how it works, because when interest rates go down, it's great for the stock market, so money comes in. So it all lines up. Just think about this in your head right now, how this picture is being illustrated. Trump takes office, interest rate cuts, there's 3 on the table. Now apparently there's 5 interest rate cuts on the table for this year, and all this money on the sidelines wants to come in, but our market is overvalued, like they say. And if that's the truth, which could be argued, maybe it is. And if that is the case, $7 trillion doesn't want to pay overpriced and overvalued stocks, right? So what do? They implement tariffs and fear, tank the market, bring it down. When this happens, they utilize this to create fear and panic and sell off, allowing $7 trillion to come in and allowing that fear to kind of somewhat degree rationalize rate cuts quicker and more of them. And now we're hearing talks that we're no longer going to get 3, we're going to get 5. This is kind of all up in the air, but when you think about it, it lines up with tax season. Tax deadlines are coming up in just a little over a week. We have Jerome Powell speaking tomorrow, and we have him speaking the 3rd week of April, which is just a little after tax time. And beyond all of that, all the charts line up with that, as well as the tariff issues going on and the interest rates being cut. Everything is just lining up for April. They're trying to turn everything around and get money into the stock market. That's what it seems. And when you put all that perspective together, and you also think about the fact that, well, our market has been working its way down slowly since January, China's has been working its way up. And then after the tariff announcements, China, along with us in the world, went down, but we're recovering and China has fallen more. Yet China's been in a 7-year downward spiral. So a lot of things to think about, and it's very important to understand all the different mechanics and the moving parts of the market, which I'm trying to explain to you. I think that if tomorrow Jerome Powell announces any form of rate cuts or gives us any date, even if it doesn't happen tomorrow or next week, if we have certainty of the amount and the likelihood of when rate cuts will happen, the market will take this as a positive sentiment. There'll be a lot of buying going on. And if the data following this week is more neutral and not as bearish, at least meeting expectations or beating them, that'll add to that confidence and the market will do well. And right now we're holding above the gap. So this week plays a big critical factor. If this whole week goes well, that will help create this as being the floor. And it likely will be the floor if this week goes well. If you guys want to understand more data just like this, technical analysis, fundamentals, news, sentiment, psychology, how the market works, and how you can get better at growing your portfolio, I have my free masterclass webinar in a volatile market and how to become a profitable investor and trader this Friday, April 11th, 6 p.m. Eastern, 3 p.m. Pacific. Limited spots available. Links in the information box below. I look forward to seeing you guys there. I'll see you on the next upload. Take care of yourselves.